Hey guys, I wanted to talk to you today about Palantir earnings. I'm Crossroads. You can call me Roy. As you may know, Palantir is my largest holding by far. It's over 50% of my portfolio. At one time in 2022, it was over 90%. I've been in this stock since 2021. I love the direction that it's going. And of course, I had some predictions out. I had a video on that. And I nailed most of the predictions. I want to talk about what I didn't get right and three areas of concern that I see with this stock heading into the near future. Now, as far as earnings, they did phenomenally well. Let me show you this right quick. Here is, of course, the chart. You can see the after hours action, which doesn't always indicate everything, but it's up $5.81 to a new all time high in the 47s. Only time will tell what this will do over the next day. However, they hit $726 million for revenue. I predicted 725 million. I'm going to say I got that pretty close there. That's a 30% year over year growth rate. I think critical for maintaining the momentum of the stock. 10 cents EPS, that's a beat as well. And they raised guidance, net dollar retention, which I don't know if I put on my X post or not, but I predicted it as 118%, nailed that as well. But I missed something very big. Now, let me throw this up here. This is actually a very important number right here. Customer count, this slide right here, up 39% year over year. That is phenomenal. But if you look at this quarter number, I predicted 645 new customers. Instead, it came in at 629. That's an acceleration of 6% sequentially, quarter over quarter. And if you look, you can see when, of course, AIP boot camps were launched, that they were growing at this 10, 11, 12% rate. And that has slowed over the last two quarters. That is an area to keep an eye on and a potential area of concern. Now, why do I think that they are slowing a little bit in terms of customer count? Well, Alex Karp talked a little bit about this in the earnings call, and he basically said that they're needing to hire more people. In past earnings calls, and also when he goes on to news conferences, he talks about this unprecedented demand that they have, that essentially they have more demand than what they can keep up with. And some people were like, oh, it's just Alex Karp doing a typical CEO thing and exaggerating. I don't think that's the case. And I think that this, more than anything else, shows that they have not been able to keep up with demand. That, yes, they have a great sales strategy now. The AIP plus the boot camps that they launched early last year really was a magic bullet for this company that cured this sell cycle that they were trapped into. Great product, but they weren't able to scale it like they needed to and sell it like they needed to. But obviously that's working. Their revenue is growing 30% year over year. Customer count still growing 39% year over year. But the reality is that over the next few quarters, this is something for us Palantir shareholders to keep an eye on. Will this rate continue to slide? Will they see it stabilize here at the 6 or 7%? Or is this just a one-off? A quarter doesn't make a company, but we need to keep an eye on it. Now, related to this, Alex Karp also mentioned in the earnings call that they are hiring a number of new employees. We can actually see that over on this slide, just a little bit of impact from this. So this is a company, as a SaaS company, many of them have very high stock-based compensation levels, and Palantir falls into that bucket quite well. We can see the line item here for stock-based compensation. We can see where they were last year at $114 million, that's 114 million, and that's accelerated here. You can see quarter two came in at 141 million. And quarter three, 142 million. That's a lot of stock-based compensation. As far as percent to revenue, it's actually not too bad. There's something called the rule of 40. Many SaaS companies use this. I know Block, which I'm not a shareholder of, uses it as well. Rule of 40 is looking at a combination of the revenue growth of a company and its profit margin. And they say that those two variables should be at least 40% or higher. Of course, Palantir first hit that back in quarter four, 2022, and began to have this slide on it every single time, as well as a chart earlier in the earnings. They're currently at 68%. So they're doing just fine there. As long as you see that number continue to increase, then that's a good thing. But the warning number two, beyond the bottleneck, the slower customer count that we see, Is this stock-based compensation? Alex Karp and team said that we should expect to see a little bit more of this from two vectors. One is from the new hires that they have coming on board, so there'll be a little bit more stock-based compensation. Although if these hires help them grow and scale, and they do a phenomenal job in selecting their employee talent, it's net a good thing, although it could be a headwind in the short time. Now, beyond that, the other reason why we should expect more stock based compensation is they have performance uh, shares that are added onto them based on certain measurable achievements. And some of that is related to stock performance. Now, if you haven't noticed in that earlier slide, go back to it. Palantir is up tremendously this year and also last year. It's one of the best performing stocks in the stock market. Only time will tell if that continues. But as they continue to hit these metrics, it means that more stock based compensation will be paid out in the form of bonuses. Well deserved in this case. However, that is something for us shareholders to be aware of. Now, there's one other area beyond the bottleneck and the slowing customer count, beyond increased stock based compensation over maybe the next few quarters to be aware of, and that is falling interest rates. Now, you may say, Roy, what do interest rates have to do with Palantir? They are a software business. Well, of course, as rates fall, that may help them actually sell their product a little bit better. But beyond that, they have a very squeaky clean balance sheet. They have over $4 billion of cash and cash like assets on their balance sheet. And of course, with interest rates being what they are, and given the size of that cash pool and relative to the cash that they're bringing in, they generate a pretty large sum of net interest revenue. Now, that amount will slide over in subsequent quarters. Of course, rate cuts hit September 30th, and we're expecting another rate cut, possibly two this year, probably just one. We'll see. And through next year, we'll continue to likely see rate cuts come. And so as a result, Palantir will be making maybe a little bit less revenue as far as net interest. Now, a little bit of good news with that, their free cash flow was in the 400 million range this quarter. And so their cash pile continues to grow. Even if revenues, the percent that they're yielding on that falls, they will continue to make a lot of money from this as well. So those are just a few things to keep an eye out for in Palantir. Now, overall, I'm not changing my position or stance on Palantir. I plan to hold this company for at least a decade, if not longer. And I expect that I will probably have some of this in my portfolio until I die. Honestly, it's a phenomenal company. I'm excited about the way that they're going. This is a great, great quarter. But those are three areas, again, to just keep an eye out. So as far as what do you think? If you're a Palantir shareholder, are you buying more stock here? Are you selling covered calls aggressively? Are you taking some profits? Are you selling out your entire position and going into something else just because of the multiple or something else that you've seen? Let me know in the comments. As always, thank you for watching, commenting, subscribing. And until next time, happy investing.